Let's talk business now as Nigerian equities market sustained the bullish run recorded in the previous week. The market closed up on 3 of the 5 trading days, pushing the all-share index up by 1.11% week on week to 39,157.29 points. Consequently, year-to-date losses moderated to minus 2.77% from minus 3.84% at the end of the previous week. All sectoral indices closed positive with the exception of NSEINS minus 4.10%. Best performer for the week was Critics at plus 23.56%, while the biggest loser for the second consecutive week was CWG with minus 26.14%. On the corporate scene, WAPIC released its 2020 FY audited financials, recording an increase of 8.79% year-on-year and 465.57% year-on-year in gross premium income and profit after tax, respectively. Joining me on News Central now is Aziz Lawal, the Managing Director at Trust Bank Capital Management Limited. It's so good to have you again on the news.
Thank you, Rita. Thank you for having me.
All right, let's go straight to business. NGX sustained positive outcomes 3 times out of 5 last week. What led to this improvement, and why did the insurance sector lose by minus 4.10% at the close of trading?
Yeah, thank you, Rita. That's 2 questions in one, right?
Yeah.
Yeah, so after the decline we saw on Monday, we saw value investors moving on Tuesday to buy attractive counters. As a result, the likes of Okomo Oil, Dangote Cement, they gained to lift the all-share index up by 0.5%. We noticed the same trend on Wednesday and Thursday, along with significant increase in negotiated deals, as the market further improved by 0.74% and 0.1%. I mean, the bullish party was on until late on Friday when the bears found their feet, as they dragged the all-share index down by 0.14%. However, week on week, the market still gained 1.1%. As for insurance sector, I mean, what we witnessed last week was as a result of offload of insurance stocks that had moved up in the previous week. Going into next trading week, a reversal of trend is more likely for the insurance stocks. Thank you.
Okay, so another positive news with WAPIC Insurance was that it reported profit from the 2020 full year report, recording an increase of 8.79% year-on-year and 465.57% year-on-year in gross premium income and profit after tax, respectively. What exactly led to this?
Yeah, to start with, that's an impressive performance by the insurer, considering the challenges faced by insurance companies during the year under review. And like your colleague reported earlier, we are beginning to see such challenges again for the insurance. Like when you hear protest, I mean, that's not good news for insurance companies, right? And we had enough of it in the year under review, particularly the NSAS protest. So for insurance companies, last year was supposed to be a year of reduced premium because of lean activities in some months, arising from the lockdown, of course, the NSAS protest. Yet, the company grew its gross premium by almost 90%. That said, the impressive growth seen in the company's bottom line was supported by the significant increase in claims recovered from insurance companies. It grew by over 60%. So that's a very impressive performance once again. Yeah, thank you.
Okay, Aziz. Now, the Treasury bond auction held during the week saw stop rates on the 91 and 182 days unchanged at 2.00% and 3.50% respectively. Rates on the 364 days, however, shed at 10 BPS to settle at 9.64%. Analysts are predicting that bearish sentiment will continue. What's your own prediction?
Yes, that bearish sentiment, I'll use decline there to explain my points. So rates have now remained muted for the 91-day and 182-day maturity since February, while 364-day has seen decline in the last 3 auctions. So going into next week, what you may call my prediction, going into next week, the next auction, which is scheduled to hold on Wednesday, 16th June,
Okay.
we expect, the DMO is expected to roll over about 14.84 billion worth of bills.
Okay.
So we expect that the LD subscription to be
All right.
oversubscribed, and we also expect that we'll see the rates for 191 and 182 day maturities, they will be maintained with a possible marginal decline in 364 day maturity bill.
All right. Thank you so much, Aziz Lawal, for sharing so much on the business segment of today's news. Thank you.